to our next one. This one, oh my gosh.
Oh
Is
boy.
it popular?
This one is very popular. In
This
fact,
is very
it has
popular.
what Fabio and I would call a cult following. Now, that's not meant to be a derogatory term in any sense of the word at all, but it's true in this instance for this particular stock that we are about to announce next. And Fabio, what is that stock?
It is none other than the vegan food Goliath, the local small business vegan food conglomerate, Tattooed Chef.
Tattooed Chef. And we have this Tattooed Chef is on our radar to do some very, very in-depth due diligence when it comes to Tattooed Chef so that we can really see what this stock is all about. Because there's a lot of different camps of people out there. There's a lot of people who swear by Tattooed Chef that are like, Tattooed Chef is going to the moon, Fabio. Tattooed Chef's going to the moon. And then there's the other camp of people that say Tattooed Chef is going nowhere. It's not even going to leave the ground. So what we're going to do, is we are going to do an in-depth, comprehensive due diligence into Tattooed Chef, TTCF itself. So Fabio, I see here that you put a growth rate in cash flows of 20,000%.
Mm-hmm.
And the price to buy in this instance would be, is that $32 billion, Fabio? Per
share.
Okay, perfect. I mean, it seems completely reasonable to me. I mean, I don't know. No, jokes aside. Fabio, what are some of your preliminary thoughts coming into a company like Tattooed Chef?
So yeah, let me take a quick look before I look at anything else. Price free cash flow -28. So that's what's actually this number comes in for. So we actually have to then predict, this is an assumption, what that is. And actually 7% for food company. Let's think about one that we could compare it to. I think a food company can get up to like 10%. What's that? Conagra Brands. Let's actually just do like a super quick look at Conagra Brands. So what's Conagra?
Nice.
Right here.
Conagra Brands Incorporated.
Do you know about this business? This is what Tattooed Chef can more or less be compared to at the moment. As this is the big boy though. This is Okay, so let's round that to like $1 billion. So $1 billion. Yeah, you see like almost 10%. So that's like what we can see is like the pinnacle, right? The awesomeness. So around there. So let's be a little conservative, right? And say 7%. So 7%. Let's keep it at 7%. If we do, let me show you what it would look like we did that. You see the numbers change, they get bigger. Ooh, fancy. So let's keep it at 7.
Fabio, something that I'm kind of wondering is, can you change our discount rate to 100%?
For which one?
For this
I will not change the 20,000. The 20,000.
No. Yeah, keep that 20,000 and then change our discount rate to 100%. Interesting.
Yeah, well, that makes a lot of sense. The growth rate is greater than,
perfect.
So let's go back to the 50.
It answers every question I had, so thank you.
Okay, if you were wondering, 20,000 growth rate per year for 10 years, it will be a buy. Anyway, no, let's be like kind of oh, didn't mean to do that. Meant to put another 0. Sorry, everyone. Let's be like that. All right. So let's say you think they're going to grow. They're going to double every single year. That maybe some people think that. I don't know. Right here, I know that we're making an assumption for a cash flow rate of 7% longer term. And that's kind of an assumption. So keep that in mind. I'm not being too aggressive. I might be being aggressive. I don't know. I'm assuming no buybacks or dilution. I don't know. They might do it. They probably will. Just by the top of my head, they're a brand new company with negative cash flows. They're probably going to do it. All right. So key ratios. Let's go back here. We're going to look at the inventories last, but that's going to be important for this business. Anything sticks out here?
Very important. Not to me, Fabio.
No, things look pretty good. It makes sense. They're right here. They paid down the debt with the IPO. That's what the story's telling me. I haven't even looked to confirm that. This is what the numbers are telling me. Long-term debt ratio looks good. Long-term debt to capital looks good. Everything's looking good on the balance sheet. Great. Gross profit margin declining. Interesting. Operating margin. So that's a red flag of scalability right off the bat.
So
Brand
yes,
new
when we
company,
go
but
further and we do further due diligence into this, we're going to be specifically looking at some metrics to determine scalability, which you'll see in our comprehensive due diligence video of TTCF itself. Fabio, I kind of have another question. I've heard people say that TTCF is very cash heavy on their balance sheet. It's very cash heavy. Why would they then need to dilute shareholders? And I'm kind of curious, bringing it back, hopefully I don't die in the trenches this time, like you accused me of last time. Very mean for me, by the way. But I'm kind of curious about going into their statement of cash flows to kind of see the way cash is being derived,
Yeah, when we do the deep dive, 100%. That's kind of the answers we're going to bring to the table.
Yep, exactly.
And this could be this is telling me right here, one-time events. And if anyone's out there shouting out, they had one-time expenses, I know the numbers are telling me that they had like one-time expenses here because this is oddly low compared to 2020. So they probably did, right? All right. So then going here, shenanigans. Well, this doesn't matter right now because they're negative cash flow. Doesn't matter. All right. Here, inventory numbers, very important. All right. This is getting bad.
Day sales of inventory is getting very bad.
Yeah, that's getting very bad.
Yeah.
Asset turnover. Again, new company. We could see more information come out in the future. If you somehow know that these will improve, those are metrics you need to know. You might have more information than we do. You can assume those. This has nothing to do with the valuation model, but they should be kind of influencing your discount rate and growth assumptions. Because if you think this is improving, then you can increase your growth assumptions. All right. So summary, interesting stock to look at. YouTube finds a stock.
I'm going
really
to have the best time doing the due diligence on this stock, Fabio.
I didn't even see the Altman Z-score. Altman Z-score is 19. They're not going to go bankrupt anytime soon based on the cash they have on hand and stuff
within the next 3 years, which is what classifies as soon.
And that number could change. That number could change.
It could. And so, Fabio, I'm actually very excited to do the due diligence into Tattooed Chef personally. I'm very, very excited. I don't know about you, but me personally, I'm very excited for it. What about you, Fabio?
I'm excited just simply because the YouTube community seems to be really excited about this company.
Yeah.
We guys want to see, okay, 30%. So we are having to assume, let's say if we're just wanting 10%, just to play around with the numbers real quick. Yeah.